Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, we had a little bit of an inside bar day, not really clearing yesterday's price action, nor the price action of Monday. So the markets still remain roughly muted. However, it was a nice day of broad market performance. Most of all our major indexes ended higher, and that is in spite of a still stubbornly elevated VIX and still stubbornly elevated oil prices as the conflict in the Middle East currently rages on. Unfortunately, Iran rejecting the US ceasefire plan, issuing its own demands as strikes land across the Middle East. So obviously this is an ongoing story, and we'll keep you guys updated with the most recent events every single day. Today, though, no new developments. So in today's video, we're going to focus on many other things. A lot of price action today and many different charts and themes and different stocks that I'm looking at specifically for trades and or for long-term investments. So in part one of the video, we'll be going over the news headlines of the day. A lot of very interesting tech headlines today, so we'll cover a lot of those first. After that, we'll get into the charts and cover our technical analysis on our major market indexes, check on the price action, see who's establishing control, and where we could break up or down depending on the direction that this conflict takes in the next few days, because we know that that's been the main thing that's been driving the markets recently. So we'll take a look at our indexes and see where the rotation is or where it is possibly lacking. After that, we will get into the big tech list, because many big tech names had some good days today, had a good day today, especially AMD up like 7%. Very strong move there. We'll take a look at the rest of other big tech names and derive which of them are good for long-term investments and which of them could also be good for very nice swing trades. And at the very end of the video, of course, we'll be going over the biggest gainers and losers of the day. Many names printing to the downside today. However, the names that were up today, a little bit more interesting, as a few other key themes that we've been speaking about since the beginning of the year came alive today after a big piece of news. And that's going to be it for today's video. So let's get right into it, shall we? The S&P up about 0.56, the Q's up 0.66, not a bad day, and broad market performance to the upside. Now, the heat map looking pretty good right here. Most of big tech participating, except sadly for Microsoft, and even Micron was down a little bit. Some of the memory names taking a hit today, and there was one news headline that was the reason behind it, and we will explain why towards the end of the video. After that, banks and financials, not too bad of a day, although still remaining one of our weakest sectors as the private credit concerns continue to plague a lot of these companies. Healthcare, not a bad day, decent bounce. Been a while since healthcare's got a big bounce. Today was definitely one of those. And the bottom half of the market also not too bad. Many industrial names, consumer defensives, even utilities and basic materials getting a little bit of a bounce, as some of them have been coming down pretty hard over the most recent week and a half. Moving on to the one-day relative, you can see that even better to where basic materials, healthcare, cyclicals, industrials, technology leading you higher. The one that didn't perform too well today, energy. However, on a one-week relative, that's been your best performer. So today, taking a little bit of a breather, some of the oil and gas names, of course, energy still on the one-week relative. By large and by far, the clear winner right here. Financials making it back into the green. Basic materials, industrials also making it back into the green. You remember this yesterday. We had nobody except for energy. So now a few other sectors joining Team Bull right now. On the 1 month relative, after such a big decline because of the war headlines, energy still, though, that is your biggest winner over the past 1 month's worth of performance. As of right now, your fear and greed index still remains at a very low print of 19. And speaking about the fear and greed index, we'll get into other statistics right now and derive, is it still a good opportunity to go shopping in the market carefully? And also, right, just playing a little bit defensively right now, but should we be buying or just sitting on our hands waiting or panic selling everything right now? You guys probably know my opinion on that right now. We should be buying, although in a very careful fashion. Fear and greed right now at a very low print of 19. Market momentum remains in extreme fear reads right now. Stock price strength in terms of net new highs on the New York Stock Exchange, still in extreme fear territory. Not many stocks hitting brand new all-time highs in the S&P. And stock price breadth also still remains very weak. And we know that usually when market breadth remains in such weak conditions, it's a decent opportunity, guys, to go shopping for some of your favorite companies. The 20-day EMAs, right? Percentage of stocks above your 20-day EMA, getting some lift right here, back up to 36. So not as low as we saw last week and over the past few days, where we were saying it was a nice opportunity to nibble on some stocks. Percentage of stocks above their 50-day EMA, also still at a very low print of only 30%. It's still in the bottom half of the range where you would want to go shopping. At least that's been the case when you kind of drag this one back over the course of the past 10, 15 years. And percentage of stocks above their 200-day EMA. Never got super low. We really only got oversold on the shorter term time frames across a lot of these things, but still in a very low environment right now. Under 50% of all stocks are above their 200-day moving average. So keep that in mind. Extreme fear territory also comes with a lot of people buying protections. Your put and call options ratio now moving down from extreme fear to fear. And this has literally been over the course of the past 1 or 2 days, right? So you can see a net taking off of possible volatility premiums here by a lot of people who have been possibly hedged in the markets or whatnot with the ceasefire talks. People might have taken those hedges off. So your put to call ratio has seen some significant declines today, even though the VIX market volatility as a whole does remain very high, currently sitting around neutral territory. I would argue that this is probably more fear than not. Although that indication has it at neutral, VIX has remained stubbornly sticky here, currently trading around the 25 mark. So in terms of more news headlines today, guys, number one, I will remind you of the statistics in which we find the statistics surrounding the environment in which we find ourselves right now, right? So number one, we'll bring this up again, retail trading activity, printing some of the lows of the year, well off the highs from October when everybody was super bullish on the markets. And now with the private credit narratives, with the Iran situation, with the SaaS apocalypse sell-off, the AI, some of the AI sell-off, especially in Mag 7 names, et cetera, et cetera, et cetera. The AI bubble allegations, well, you can see retail trading activity is at very low levels right now, usually a decent time to buy when retail is by large and by far bearish. AAII member sentiment. How do members feel about the direction of the stock market in the next 6 months? At a very low print here, 52% of everybody right now is bearish. Bearish is the consensus view. Now, it's never a good opportunity. It's never a good environment in which you are going with the consensus. And you'll notice last year when stuff really hit the fan during the peak of the tariff sell-off, that capped out at about 62% of all people were bearish. And we know that that was very close to the bottom. Moving on a bit further here, NDR daily trading sentiment composite as well. You are still in extreme pessimism territory, usually also synonymous with the markets being in an environment where you would want to go shopping, not heavily and not all in, but at least shopping for some of your favorite names, a lot of which could be currently down 25, 30+% off their highs. Never a bad opportunity right there. Moving on a bit further, smart money and dumb money confidence. Just reiterating what we were talking about yesterday, you will see that I circled 3 distinct locations on this chart. The top line obviously is the performance of the S&P, and then you have smart money, which is institutions, and then dumb money quoted as being retail down here. And it's the shifts in landscapes that you really want to pay attention to, right? You'll notice that into the tariff lows of last year, institutions had been loading the boat. And then when the markets did bottom and we started rallying, the institutions were offloading their shares to who? To retail, which retail was again late to that trade. And then you can see all throughout while the market was rallying, institutions just lowering their positions while retail was still pretty much fully allocated. If I move myself over, you'll see the slight market dip that we had last October into November. At the bottom right here, once again, you'll see that retail panic sold again, and then institutions were there to rapidly buy the dip. And as the markets recovered, what did the institutions do? Well, they basically, everything they had accumulated since September and October, they offloaded to retail, who was very happy to once again load up at the top of the market. And now as we kind of tumble off since the February period of time, you can see institutions have been, let me move myself over again, institutions have been buying the dip, whereas retail once again has been panic selling out of their position. So depending who you want to follow, do you want to follow the retail crowd or do you want to follow the institutional crowd? I will leave that up to you. Moving on further here, some interesting news in terms of tech news today, because we've talked about the Iran situation so much. Now we're going to give you guys some nice tech updates here. So SpaceX targeting up to a $75 billion funding in a stock IPO. This would put investor allocation on an individual basis up to 20%, or maybe even exceeding 20%, which is very good. It means that if you're on a broker like Robinhood or possibly others that get pre-IPO allocations, watch out for this one over the course of this week, because the IPO may be coming this week. 75 billion funding round would put the valuation of the company anywhere between 1.3 to 1.7 trillion dollars. This would also include XAI, which is basically Twitter right now, plus all the data center business that Twitter currently has. And you will be able to see Twitter's financials finally, after being a private company now for the better part of the past 4 or 5 years, included in the SpaceX IPO as well. And as a result of this big news that came out last night, well, we had a very big rally in space stocks today. Space stocks are absolutely ripping. You can see some of the prints right here: Lunar, Fly, MNTS, BKSY, Planet Labs, Rocket Labs, ASTS, Space, RDW, Redwire, and Voyager. So very nice. And here is your backlog. I own a few of these because we know that the space trade has been very popular now for a couple months. I own a few of these, and we'll be talking more and more about them as we kind of move into this thematic trade. Once again, this is a thematic trade at least for the next 5-10 years. You remember I showed you the NASA news yesterday that they were launching a moon base, right? $20 billion for a moon base, and also launching a nuclear-fueled rocket ship towards Mars for more surveys. But we also know there's been a lot of constellations, a lot of satellite work that has been launched in the last 2, 3, 4 years. So the space economy is getting bigger and bigger and bigger, and many of these companies have substantial backlogs, and many of them don't trade too expensively in relation to forward price to sales. We'll be covering more of these as we move on through time. Moving on a bit further here, Indian billionaire Adani is in talks with Meta and Google on potential partnerships for its data center business. The discussions are part of Adani's broader $100 billion digital infrastructure push in India. So the AI trade continues to get bigger and bigger and bigger at this point in time, and now obviously is very much worldwide. Moving on a little bit further here, Melania Trump today walking through with a robot. Now, this was quite fun together at the Future Together Summit, talking about the use of AI for learning. Now, obviously, guys, I mean, you know, it's not a Tesla robot, unfortunately. However, very interesting to see. Now, we know that the Chinese are largely ahead of the US in terms of robots, you know, personal assistant robots like this, or just humanoid robots. You've seen probably the dances and the choreography that the Chinese robots do, but interesting to finally get to see them as part of a US endeavor right now. So I thought that was pretty interesting today. Moving on a little bit further here, South Korean chipmaker SK Hynix plans a confidential filing to list shares in the US in the second half of 2026, which a source said could raise as much as $14 billion. Pay attention to SK Hynix. So far, the only way to play it, well, not many brokers offer SK Hynix or Samsung. The broker that I'm with, Interactive Brokers, you can buy these companies directly, although you will be buying them in foreign currencies. That being said, the only real way to play exposure to these South Korean memory manufacturers, right? Well, Samsung does many things, and so does SK Hynix, but they're mostly now, at the current time, they're in the memory narrative. The only way that most people can get exposure is through the Korean ETF, which is EWY, but it will be interesting if SK Hynix actually comes with their own ADR to the public markets later on this year. I'll be paying close attention to this one in the second half of 2026. Moving on a little bit further here, Nikkei Asia reports that Intel and AMD have raised CPU prices again in March, taking 2026 increases to about 10 to 15%, while lead times have gone from 1 to 2 weeks to as long as 6 months, a sign that the CPU shortage is getting worse. And as a result, you've had very nice price responses today. Intel up 7%. I have this one, and I also have a boatload of AMD up 7.25% off of that piece of news right there. Moving on a little bit further through our news reports, this one right here, TSM, the N2 node is almost sold out over the next 2 years. This is the company's new 2-nanometer class of process technology, which represents its most advanced semiconductor manufacturing process. As of 2026, 10 to 15% higher performance at the same power, 25 to 30% lower power at the same performance, which is very good, and 15% higher transistor density. So very solid, guys. Booked out for the next 2 years. TSM still one of my favorite companies in the market. Why? It's very simple. They win in all cases. If NVIDIA wins, TSM wins. If AMD wins, TSM wins. If SK Hynix and Samsung win, TSM wins, right? If whoever, so many different companies have all their processing done by TSM. Very strong news release by the company right there. It just goes to show you how much pricing power the company has and how much visibility of earnings the company has. I mean, they told us as much on their most recent earnings release, where they were able to raise revenue guidance for the next 3 years and also ensure 5 to 10% price increases every year through 2028. Such a solid business overall. And last but not least, normalized GPU rental price appreciation. AI compute prices are going up across the board, especially in the newest installed Blackwell B200 chips, followed by H100s and A100s. AI demand is surging, showing no signs of slowing down. And you guys know why? Because since December, my big head unfortunately is in the way, but you can see the inflection point here in December. What happened since then? Well, the massive adoption of agentic AI, right? By Claude, by certain features in Gemini, et cetera, et cetera. So you can see the price to rent GPUs is skyrocketing across the board, and not only across NVIDIA's Blackwell series, but obviously across their Hopper series and all their previous iterations of their graphics cards, right? So very strong numbers right there. Once again, another piece of data showing you that even though so much excess capacity, or not excess, but so much capacity has been coming online, guys, there's just not enough. And I mean, you don't have to look further than all of the CEOs of big tech companies, or even Jensen himself, right? They keep saying this, and still to this day, people just don't believe that there's that much demand. Well, hopefully you can see it in the prices right now of GPUs. AI inference, right, for agentic model training purposes or agentic inference purposes, it's going to require so much more compute than previously, whereas last year the markets were in a different regime. Last year, it was basically just very simple prompting, right? A lot of training purposes as well for your LLMs. Now moving towards agentic AI, far more compute is needed, and as a result, you can see very sticky prices. And this is good for not only the Mag 7 companies investing very heavily into these data centers, but also some of the neo cloud providers, right? Like NBIS, IREN, CIFR, and that whole crew right there. So those are some of the big news headlines of the day, and just reiterating the fact that, well, when everybody's bearish across the board, right? Maybe you want to take the other side of that trade. However, you have to do it in a very tactical fashion. And also you have to be very careful about the stuff that you're choosing to invest in right now, because we know that not all narratives, not all themes are working very well in the markets. We do still have several bearish catalysts at the same time, which is pretty much getting the markets into a everything in the kitchen sink environment, right? It's tough to play some of the financials when you have private credit concerns. It's tough to play, you know, the Mag 7 and whatnot when they're so heavily tied into the index performance. And we know that that's been coming down because of the Iran situation. However, there is always a bull market somewhere, guys. And hopefully when I go through the end of the video, as we have been doing, well, every single video over the past few months, right? Hopefully you've been able to identify some of the trends that even if there is a current situation ongoing in Iran right now, a lot of these stocks, guys, you know, have been performing excessively well. So it's your job as a trader to find the names and find the niches of the market that all throughout the conflict, the prices have not been correlated to the indexes. I'll just throw out one off the top of my head right now, right? Like Celestica. Okay, conflict started March the 3rd. What has Celestica done since March the 3rd? Only moved higher. And there's so many examples of this, guys, of stocks that are running counter trend to the overall indexes and counter trend to the overall war situation. Why? Because no matter if there's a war going on right now, there's just so much money flowing to these companies because of the AI theme and other possible related themes as well. A good example of that is the photonics niche right now. I mean, take a look at Fabrinet, right? There's no war here. Coherent, arguably there's no war right there either, right? AAOI, right? So I'm not diminishing the impacts of the war. I'm just saying if you are trading the markets, well, you may as well be trading these as opposed to some that are just heavily correlated to the downside skew that a lot of the indexes, a lot of the large cap companies have been facing recently, right? So that's your news cycle. Hopefully you enjoyed that. Kept it a bit shorter today. Now let's get into some charts. So moving into the good old S&P, guys, well, not much has changed in the form of price action, right? We are still looking for a break in either direction. Line in the sand is either Monday's high or Friday's low, meaning if you crack the Monday high, set your first daily uptrend in about a month and a half, right? So that would be quite significant. Upside target at that point would be 673 to 667. A lot of you guys might be waiting for this break in structure higher to recapture a few of the key moving averages, the short-term 12 EMA and the 200-day moving average as well. Gives you a better indication that you do have a tradable stop loss down below here, and you might be able to layer on a bit more size into long directional trades. If they break down to the downside, guys, quite simply, we're heading back down here, 641 to about 633, and that would put you at a very casual 7 to about 9% sell-off on the S&P from the all-time highs. The takeaway from all of this, guys, even though the price action is quite unclear right now, is for long directional trades on many sectors of the market, there's many sectors out there that are just untradeable right now because they're all in daily downtrends and weekly downtrends as well. If you are directionally trading, it is your job to find the sectors of the market and the niches and the themes that we talk about regularly at the end of the video that have been posting very solid uptrends. Things like photonics, things like recently the space trade, right? Things that are not correlated necessarily to this decline in the S&P, industries that are having big money flowing to them on a regular basis. Additionally, the way that we can trade the markets is the way that I like to trade the markets with a portion of my portfolio. So directionally, I'm playing some of the momentum sectors. Okay, in terms of non-directionally, what I'm doing is I'm selling puts under the market on some names that have been beaten down, such as the Mag 7 names or other large cap names that have been suffering recently. I'm selling the volatility under a lot of the key market structure levels, either on the S&P or on individual names themselves. And we'll get into that at the end of the video. If you are a long-term investor, okay, well, the recipe is very simple, right? Every single one of your paychecks, 10-15% of them should be put into your favorite companies or your favorite ETFs. And we can't really say that there's not good deals, right? Most of the Mag 7 right now have sold off 20, 25, 30% off of their highs. You're finding phenomenal discounts on legacy companies such as Visa, MasterCard, American Express. There are so many good deals all over the place. So it is our job to be DCAing throughout this current market environment. Moving on to the QQQs right now. Qs also inside candle with Monday's trading and yesterday's trading as well. So no new developments on the price action. You're looking for a clean break above 594. That will be a clean recapture of the 200 and the 12-day EMA, something the bulls have really struggled to recapture here over the better part of the last month and a half. You get that uptrend, at least we get a tradable low, and we can layer on a bit more size into some companies that track the S&P and the QQQs, although with a higher beta. Looking at you guys, the Mag 7 down here, right? Those would be probably front and center for positions there. If you don't get that clean break, no need to speculate, guys. If you head a bit lower, very simple, right? Up on a nice upswing and lightening up of bearish positions here by the market, right? Well, we can layer on a bit of size and possibly some new swing trades directionally on many of the names that have sold off in a tremendous fashion that I haven't touched for a while for directional purposes. If you break down lower, very simple, guys. I'm just going to be selling puts under the market, way under the market. And some of my favorite companies I covered in the top 5 options video last Sunday. So you see, I am prepared either way. I'm not speculating. I'm not going to sit here and play geopolitical expert, Strait of Hormuz expert, military expert. No, none of that, right? I have a plan for either way. You break, you give me some of the EMAs, you give me a daily uptrend, we can think about trading these local lows as a stop loss territory, right? And with better price action. If you give me a breakdown, no problem at all. I'll just keep farming premium way below the markets with a high VIX. Prepared either way for the trading landscape. That is how you should be approaching these markets, as opposed to being, a very headline-driven person and being emotional and being nervous, all that good stuff, right? Moving on to the XLF financials right now. XLF also no indication of the daily uptrend just yet. Need a break and close above 49.85 and then attack this resistance range. 51.50 down about 50.14. It's very important because you haven't had a daily uptrend in a very long time right now. If you do get it, at least you get a tradable low at the bottom there. And if you don't get it, if you get the breakdown, well, XLF still a very nice opportunity to be selling some puts at the lows right here, or to be picking up our favorite financials companies and some of their own respective lows. Bank of America putting in some highs, come right back down here. No worries. I'll be selling some put options in that lower support zone. Visa, phenomenal pickup down here. MasterCard, phenomenal pickup. And even American Express, which has come down significantly from its own highs, very decent pickup as well. And even names like legacy names like SPGI and whatnot, right? Just nibbling some shares. I'm not necessarily playing the wheel on these just yet, nibbling some shares. So there's opportunities all over the place in financials. And another one, just a bit of a freebie, right? CME Group, right? Pay attention to this backtest down there. Very, very, very solid business model right there. And they broke out to the highs. I'm maybe looking for a backtest for possibly some swing trade longs, just something else I'm exploring right now. Moving on to XLV Healthcare. XLV with a nice little bounce, but a bounce in the context of what? Well, sadly, it's a bear market bounce right now, right? So we will see if they're able to reclaim the 200 and the 12 EMA. If they give you better price action structure, reclaim the support, reset the trend, then we know we can get in with a bit more size on some of the healthcare names right now. As of right now, still too weak, though, to call this an absolute true low without actual price action direction change. 148 down about 145 is your support level. If you just flush from here, you're coming down to the very big one, guys. 140 to 135. If we revisit this level again, it would probably be a gift from the markets towards the 50-monthly EMA. XLV rarely tags that, rarely tags it at all. So I haven't been taking any healthcare positions as of recently, but if we do tag down there, one of two things: either give me better price action, I'll play, or flush down to the lows and I'll play. Right now in the middle ground with all this momentum, a little bit unclear, right? So still very choppy. Moving into SMH right now. SMH, not too bad, but still kind of trendless right now, right? So they're trying their best to kind of break above these highs right now and establish some weekly higher lows. So I'll remind you, right? The context is the bulls are still in control. It was roughly a double bottom right there. They're trying. Now, this sector is not equal, meaning that some names are moving really well. Like AMD had a nice pop today. Marvell, which we talked about a lot on the channel down here, right? Marvell with a beautiful, beautiful, beautiful breakout here out of the highs. Gorgeous breakout. If looking for a back test, could be a nice little re-entry area right there. We did the valuation. You remember Marvell at 83, where we kept talking about it down there, was super, super, super cheap, guys. Super cheap. This one has big growth ahead of it overall. Some names are moving well, like LRCX and some of the other, well, this one's not in the S&P, but ASML's holding up fairly well too. AMAT holding up fairly well, but not all aspects of semiconductors have been moving. NVIDIA still kind of locked here in the whole 180 down to 160 range of price action, and even Broadcom, another huge player in semiconductors, right? Just not moving. So without those two big players, NVIDIA and Broadcom, it's going to be tough for the SMH to really get some better lift than this. But as of right now, the price action doesn't look too bad. It's just very choppy, right? And even some of the memory names, which we'll talk about towards the end of the video, right? The memory names, Micron coming down a little bit, SanDisk coming down, but not as aggressively. Some of the memory names selling off over the past few days since those Micron earnings. Moving into the Russell right now. The Russell, some small caps, guys. Small caps not doing too poorly, you have to admit, right? So they're trying to go for the trend reversal. We will see if they actually have it in the cards to go for this nice engulfing move and convert into a new daily uptrend. As of right now, 251 to about 246 is something we're trying to move through at the current time, right? You give me a nice breakout and the retest. Great. We have a tradable low right down there, and we might be able to go for some swing trade longs on the IWM, just targeting these monthlies as higher lows for possible further trend continuation. Obviously, it hasn't been a very risk-on market, save for a few key themes in small caps, which we keep referencing at the end of the videos. So I'm not in the Russell personally. However, not a bad look if you just wait and patiently watch the price action right now. Or if you want to play individual names, I'll give you guys a couple little hints at the end of the video. That's it for our overall index rundown. I mean, I guess we can cover the other ones, right? XLP, consumer staples, this one coming out of oversold conditions. Same concept as kind of healthcare, right? You need to see a trend recapture if you want to say that's your true weekly higher low. It came down with a pretty deep cut, guys. On the fib, it's a pretty deep cut, right? So still unsure. It's a 618. 618 retracement. That's pretty heavy. So still unsure if the bulls are going to be able to V-shape this, or if they have to go for the two-stage recovery. One thing you would want to see, though, if they do go for the two-stage, give me a break and close above here and try to bounce out of this support level, because now it's as resistance. You're under the 200-day EMA. Oversold conditions, though, this one will always only move up with the direction of the overall markets, and you're going to need to clean up the Iran situation, because obviously inflation, the threat of inflation rather, and the threat of higher interest rates for longer has really pressured this trade over the course of the past 3 weeks. Consumer retail is largely in that same boat as well. Inflation pressures, interest rate pressures, coming out of oversold conditions, not quite establishing the daily uptrend just yet, would need one candle higher to recapture this 12 EMA short-term momentum, and then you have a tradable low on consumer retail right there. Not a bad look, but I'm just not playing consumer retail. It's just so out of favor recently, and with the pushback of interest rates and the constant threat of inflation, it's just going to be very tough for this sector to trend properly, right? So if I'm playing direction, I'm not going to play staples. I'm not going to play XRT. You know, staples usually play those for the dividends anyways. It's not as if they really get that much lift, but consumer retail, and when I talk consumer retail, I mean like, you know, like the clothing brands, like the Nikes of the world, the On Runnings, right? The Deckers outdoor brands, the Chipotles of the world, the Nikes of the world, the Elf Beauties of the world, right? They're all down and out for the most part. Can you find certain exceptions here and there? Sure, but for the most part, consumer retail is still a very tough trade. There's just no momentum there. And to be quite frank with you, there's no macro backdrop that would really warrant these just blasting off to brand new highs and ripping on massive uptrends like you're seeing in other sectors of the market that we cover at the end of every video, right? Drones, military applications, the space trade, some of the energy trades as well, right? And also some of the semiconductor connectivity trades, such as, you know, Vertiv or other things of that nature, like Bloom Energy, right? Or some of the photonics names, right? So if you're trading these, if you're buying these, you know, trying to go for the trend reversals here, not a very easy trade, I will admit, and not my favorite trade as part of the batch of stuff that we can possibly do in the markets today. XLU, consumer utilities, I mean, they come down a little bit, right? So big downward sweep right there. They really need to reverse the trend. If you don't reverse the trend and you just set a lower high into lower low, you're coming right back down here, guys, possibly back to 43 42, which was like the liftoff zone. So the monthly time frame is still quite healthy right now. However, if you do come down and retest this 12 EMA, it'll be a beautiful entry. I'm not playing utilities as an ETF overall. I'm picking and choosing the utilities that I do want to play, such as Vistra and such as Next Era Energy, just because of their direct data center exposure. And they're going to be key themes here over the next few years. So that's how I'm playing utilities, individual companies only. Moving on to real estate right now. Obviously, real estate has just been wildly out of favor since the entire Iran situation because of the threat of higher inflation for longer, which puts pressure on interest rates. And obviously your yields, 10 and 20-year yields, very, very, very high right now. So tough for this real estate trade to get any legs whatsoever. The only REIT that I own in my portfolio is Vici. I still think Vici is a very nice pickup down here. It's not one of my largest positions by any metric. And even some of the mortgage companies, Rocket Mortgage, we've been talking about the last few videos. I mean, it's not my favorite trade in the short-term duration, but if you're looking for something for the eventual recovery of the housing market, which will take a very long time, but if you're looking for something to carry into the next few years type of thing, Rocket Mortgage is probably one of my favorite online mortgage providers. They also have Redfin and Mr. Coop that they've acquired recently as well. And last but not least, Energy XLE, these oil and gas companies printing. Look at this gorgeous uptrend. Now, obviously, the risk reversal to the downside is if you get a ceasefire or ships start passing through the Strait of Hormuz and the prices of oil really start trending down hard, well, you might have a bit of a deleveraging event in the sector right now. As of now, though, no indication of that. Daily uptrend is still very nice. So if you're riding this trade right now, guys, just keep in mind, right? Daily overbought conditions, weekly overbought conditions, and I do agree these can stay overbought, you know, for quite a while, right? But just don't get unwound. If you're trading these, you got to trade these with the stop loss. And whenever they set a new higher low and ride this 12 EMA, that should be the stop loss area. So in my opinion, trailing stop 57 would be quite adequate right now, because the last thing you want is to get unwound with a daily downtrend heading into larger weekly consolidation, right? So just keep that in mind if you're in that one. For me, no new positions. The only way that I'm playing the energy sector overall is through LNG. So not only for exports in the future, but also for data center exposure in the present and also in the near-term future. I have Enbridge, but special shout out to companies like KMI or, Cheniere, also LNG, right? For some of those future exports of gas overall. So I'm playing LNG. I'm not playing oil companies specifically, just because of their heightened exposure to the entire data center trade down the line. When this entire Iran situation gets resolved, at least those trades still have a very nice future ahead of them overall. Moving on to the VIX, talking about the VIX a little bit here, down about 6%, but still a very high volatility regime. So still a regime in which you do want to be selling covered calls against some of your biggest winner positions if you're looking to wind them down. And also a environment where you are going to be looking for selling put options below current market levels on red days with high volatility. You can get some phenomenal strike prices. And I show you guys a lot of those different option strategies on every Sunday video when we do the top 5 options plays, which are all for selling put options under the market. I go through some of my favorite companies to do it on and what levels I'm looking to do them on as well. That's everything for your overall market rundown. Now let's move into some commodities. So talking about gold right now, gold, not too bad, right? The price action on gold is not too bad. And I emphasize not too bad, because we know it's a massive daily downtrend right now. We came into oversold conditions, tagged the 200-day EMA, which, to be honest with you, we haven't tagged on gold in what, 2 years, 2.5 years, since October of 2023. So it was coming. We were always wary of the monthly pullback into the 12 EMA, just a normal thing that happens in price action sometimes, right? Now we're looking for the reversal. Can the bulls get it done? And is there any swing trades here whatsoever? There is one on this higher low attempt, right? The stop loss would go down below there and you'd be targeting upside for a bit of a swing trade right there, but you got to trade with a stop loss, right? Now, that being said, guys, the daily, obviously the bears are in control. So any moves will just be looking for a lower high, wherever that may be, right? You want the bounce to be as high as possible. The higher the bounce, the higher the likelihood of them being able to convert into a new daily uptrend, and then have to get into a new weekly uptrend regime, and then your monthly higher lows are set, and you might be looking for a little bit more. So there is a bit of a swing trade right here. Gold not looking too bad overall, but just be able to trade this one with a stop loss, guys, because it's temporarily counter trend, right? The monthly bulls are still in control. This is true, but they've lost the daily, right? So if you're not going for at least a daily uptrend confirmation, similar to what you had back here, well, you got to keep a very tight stop loss, because the last thing you want is to get unwound for another leg of monthly consolidation. And the same thing can be said on silver right now. Silver displaying many of the same characteristics of price action. Daily downtrend on silver coming back into our resistance range, 74 down to 70. Now, that being said, 4-hour time frame should be your guide, right? Looking for the higher lows. If you are making an attempt right here, stop loss comes below 66, and then you would just be targeting upside expansion through about 80 to about $84, which is your next target. It would be a nice bounce on the daily time frame, and then the bulls will have to reset the daily time frame at the same time. So keep that in mind. Moving on to oil right now, there's really nothing to say on oil. This one's going to move largely with headlines. Situation gets worse, you can definitely revisit 100. Situation continuously improves, and the market will continue to price out a little bit of the risk around the situation. But as of right now, nothing notable in terms of price action. I'm not playing oil in either direction. If you guys are, well, you do have a pretty clear stop loss area, and that will be down below 84, and you'd be looking for that upside expansion here, possibly revisiting 110 if the conflict would get a little bit worse, right? Because the last thing that you want is to get unwound down here back towards the lower 80s for a larger retracement cycle. It doesn't mean that it can't eventually go back up here or maybe just range, right? But there is a clearly defined stop loss location for anybody that is choosing to trade oil right now. So please keep that in mind. Bitcoin and Ethereum, not doing too much of anything, so we won't spend that much time on them. Still trapped in this lower location, still no conclusive price action here in terms of daily uptrend follow through. At the current time, you could still label this a bit of a bear flag. Why? Because, I mean, they've had like what? A month and a half to bounce, and how high have we actually bounced on crypto? Nothing, not even a 38% bounce. So I'm not interested in any longs right there. It's counter trend. We've lost the monthly timeframes right now. It's been a weekly downtrend for the longest time. The daily bulls can barely piece together, some decent price action. So that being said, no net new longs for me on Bitcoin. It would only be a question of accumulating for the long term. Ethereum, same thing, right? Ethereum, there's just nothing to do here, unfortunately. Into resistance, 25 down to 2,000. Once again, the bounce size remains extremely weak on Ethereum. Barely a 38% bounce, guys. So you could interpret this as a bit of a bear flag. If price action doesn't improve, revisiting these lows is a very real possibility. So no swing trade longs for me. Price action is just a little bit too weak. Just long form accumulation if you believe in the long form crypto bull thesis. That's everything for our overall market rundown. Now, let's move into our big tech names. So first off, moving into Apple. So Apple just tracking the SPY essentially, right? So that being said, daily downtrend is currently still underway on this chart. No real clear breaks in price action. You really like to see more of an engulfing move and backtest these lows. That way we can have a clear stop loss there and maybe go for a swing trade attempt on Apple. But once again, right? The SPY is going to have to do it first. I mean, arguably the SPY is just a combination of all these companies. So is it the chicken or the egg? Is the SPY going to lead, or are all these big tech companies going to lead the SPY, right? Either or, if you're looking for Apple price action, that would be something I'd be paying attention to. In the event we break down lower, I'm going to be selling puts down here, guys, in the 230 range with good volatility and good distance. Weekly bears still in control of the timeframes right now, and the monthly price action also just hunting for a monthly higher low. If I'm looking to pick up any Apple shares, it will probably be between the 240 and 230 range down here, close as possible to the 2060 EMA. Usually picking up some Apple shares for the long-term portfolio down there has been quite an attractive proposition, at least when you take a look at the last 10 years. The valuation right now is a little bit elevated, so it wouldn't be a heavy buy for me, just a little bit of a DCA nibble overall on this company. Moving on to company number 2, good old AMD, with that big old news today of increasing the prices of their CPUs. And also they did plan to ship their first MI400 and then later MI450 shipments later in 2026. But that was already known. It's just no new news for AMD. But still, this is good price action. Beautiful daily uptrend right now into resistance 229 down to 215. We've been saying for a while it was a great time to accumulate some AMD shares. Sub 200 down about this 180 range. Little pocket down there, and every time we pull down there, beautiful time to be selling some put options. So at this point in time, if you do get a retracement, I'll be selling some put options down here if you just get a breakdown from resistance. That being said, AMD not looking bad at all, right? Nice expansion here on the daily. Remains to be seen. Can they convert this into a net new weekly uptrend, either by rejecting from resistance and setting a higher low and going for the two-stage attempt, or breaking through? This would be the best case opportunity. Breaking through, set the higher lows, and go for it. That would be nice as well. AMD still, even at 220, you might think that you're late. You're not late at all. Just add 10% of this valuation. You'd be trading at about a 0.9 forward peg ratio, at about a 7.25 forward price to sales. And we know the thesis for AMD is still very much alive, guys. Very much alive, right? All the biggest growth is coming in the next few years. So to say that we're late to this trade would be a gross misstatement, in my opinion. But Keep that in mind. Moving on to Amazon right now. Amazon also up a nice 2% today, but still no changes in price action, similar to a lot of its Mag 7 peers. Amazon, what you're really looking for here, guys, is a clean break above 217. Clean break above 217 will let you know that the bulls want to play ball, that they're in for a bit of a weekly uptrend shift. It's been a while, right, that we've had the weekly uptrend since back then prior to earnings, and we're still in the phase of monthly consolidation. So Amazon, since it's in a bit of a chop zone, my favorite way of playing it, on big red days, I'm always targeting to sell premium down here under the 200 down to about the 190 mark. And I am just steadily accumulating some shares for the long-term portfolio because this company is firing on all cylinders right now. AWS growth is great. Advertising growth is great. E-commerce business is doing very well. Plus all their other businesses at around 210, the company sitting about a 1.35 peg. Still one of my favorite buys in the market, especially here to the 26 EMA in the context of bull markets. Usually a very, very, very decent proposition, guys, to be buying Amazon, so just keep that in mind. Moving on to Google right now. Google breaking down lower, daily downtrend and flushing the closest support that we had. 305 down to 295 was the range, and you've now lost it. So Google looks more and more like it does want to come down into the monthly higher low retracement area, which I've been calling this one out for months, right? If it comes down to the 12 EMA, I might be a fan of playing this one. This would be about 270, 266. We will see how the price action responds. If it does pull back into there, that's roughly in a similar location to the 200-day EMA. So I do want to see how it reacts there. I mean, there's not much in the ways of support down here, right? I mean, I guess you could say that there's a small little junction right there of support. It's not the biggest one, but it is the closest one that you have. Google right now, not my favorite for a swing trade, nor is it my favorite for a long-term buy, just because the valuation is just not one of the most compelling in the markets. I'm not selling any of my Google shares, and I say this every video, right? It's just I'm not adding any more up here. Last year was the time to add. Now is a little bit late. I mean, I guess if you're trying to buy for a 10-year time horizon, the valuation is not too bad up here, but you would want to kind of stagger your buys in the event that you get more and more consolidation on this name. Moving into Meta right now. Meta only up 0.33% today. Meta still excessively weak, right? No daily uptrend structure right now, still below 600 into big support though, 605 down to 558. So no uptrends. I'm not participating in any swing trades whatsoever. What I am doing though is I'm selling put options down here at the mid 500 range on Meta. If things really hit the fan, where is Max Payne for Meta on this completion of the full Head and Shoulders prophecy? You'd probably be coming right down there, guys, to like the low 500s, right? 540 to 500 flat for a test of the 50 monthly moving average, which Meta has literally only done like 3 times, other than the massive bear market, Mark Zuckerberg spending a bunch of money on the metaverse. Only a couple times has Meta ever done that in its history. Now the stock is already off its highs 25%, so I am a buyer here of Meta and playing short puts under the market. It's just very tough to go for anything short term. So long-term buys, big fan, as we know, under 620. The valuation right now, it's like under a 20 forward price to earnings. I think that's very fair at a 1.10 peg. Moving on a little bit further, Microsoft, another company that continues to struggle. Microsoft at this point in time now down 33% off of its highs and doing things that it has rarely ever done in the past 15 years. Number one, clear break and now possibly weekly closure below its 200 weekly EMA. This is the 50 monthly moving average. When has that happened before? Not even in the bear market of 2022. You would have to go back all the way to 2012 to find a similar period of time where Microsoft has given you this price action, right? So clear bearish momentum right now on this stock. Weekly oversold conditions. When has Microsoft been this weekly oversold? You'd have to go all the way back to 2006. So not only is it giving you beautiful under EMA entry, it's giving you beautiful weekly oversold conditions as well, but that doesn't mean the bottom is here. They can go lower, and if we do go lower, 350 to 320, suffice to say, I've been buying in the low 400s. I will continue to buy all throughout this pocket as long as we're under this big area of the 200 weekly EMA. Through this support, I'm selling put options down here, increasing my share count of Microsoft. I think it's a very good gift the market is giving us right now. Under 390, you're trading very close to the lower end of a 20 forward price to earnings and a 1.28 peg. You'd be very hard pressed to find Microsoft at these valuations. I mean, over the past decade, arguably, right? Usually Microsoft trades for a lot more than this. Great growth, great EPS, just being brought down with the entire SaaS narrative. And obviously their OpenAI concentration on those commercial RPOs. They're getting the same treatment that Oracle got. However, Microsoft is arguably a much better company than Oracle. Just my opinion. Moving on to Netflix right now. Netflix up 1.5%, but no change in price action. Daily Bear still in control. This one as well will move with the S&P in my humble opinion. If we do break down lower, you're going for the full Warner Brothers Discovery gap fill, 86 down to 82. This is the area that I would not mind playing some short puts in, so selling puts under the market. And also under 90 towards 80 is the area that I accumulate some shares for the long-term portfolio. I did a lot of that in this period of drawdown right there. I'm not really buying any above 90. Not that there's that much difference, but still 90 is kind of my personal cutoff. It trades at about a 1.43 peg at that level. Good growth, good EPS, and they will be getting that extra $2.8 billion from Warner Brothers as a breakup fee. Moving on to NVIDIA right now. NVIDIA, one of my personal favorite buys in the entire market. Maybe not one of yours, but one of mine. NVIDIA right now between two levels, 185 down to 180 resistance, and support down here, 170 to about 160. So no change in price action. So tough to go for short-term upswings in NVIDIA stock. The way that we can play this volatile range is when we get nice red days, I'm selling puts under the market for some good premium, and conversely, building longer-term share positions. Right now, the stock at about 175 is trading at 21 times forward earnings, right? But I showed you this yesterday. I'll just do the math again for you, right? How cheap is too cheap for NVIDIA? I get it, right? People don't necessarily, I mean, Wall Street doesn't believe that there's much visibility beyond 2028. They do deem that there will be a drop-off in the rate of growth for NVIDIA. Yes, that could possibly be argued, but how cheap is too cheap even for that drop-off? I mean, take 2027, right? What's the stock trading at right now? 178, yeah? 178 divided by their forward EPS of 11.12 in 2027. You're currently trading at 16 times 2027 earnings. How much are you trading in relation to 2028 earnings? Good question. Let's do it again. 178 divided by 2028 earnings, 1277, yeah? You're trading at 14 times 2028 earnings. So I will ask you the question, how cheap is too cheap for NVIDIA, right? There is definitely some risk to reward on this trade. Fair value, not only in my opinion, but in most analyst opinions, sits closer to the mid 250 range, possibly 260 plus. That being said, this one has also been wildly out of favor because of the overall market sentiment just surrounding large cap names right now. So keep that in mind. Still one of my favorite buys in the market. And if you do break down, I mean, it's just nice monthly consolidation. If you break down, max pain for NVIDIA is probably down here 150. I don't think it's going to go down there. I don't have a crystal ball though either, which is why I'm just steadily accumulating some shares. And if it does break down, I'll accumulate a bit more shares. And I'm just selling premiums, guys, under the market. I've taken this trade for the past like 4 months as frequently as humanly possible. And we've made a lot of money just farming premium under here, and I haven't really been assigned once. If they do choose to assign me at it's already a low multiple. If you assign me at 160, I mean, I'll take that present, right? For the time being, I'm just selling some premium under the markets. I think it's the easiest thing that you can do in something that's been moving sideways with good implied volatility. Moving on to Tesla right now. Tesla 0.76% to the upside, but not much here. Daily downtrend, still below your EMAs, below the 200 EMA into resistance, 405 down about 384. You break down, you're coming right back down here, guys, 360 to 340. What you need to see the bulls do is give me a new daily uptrend, recapture this resistance range, and then we can talk about some further upside capacity for some expansion on Tesla. As of right now, no indication of that. Still looking for some monthly higher lows. So no swing trades for me on Tesla right now. The price action is just not conducive to that. Right? And this one as well, just largely beholden to the price action of the S&P and the Qs. Moving on to Palantir right now. Palantir up about 0.12%. They were up like 3% today. Sadly, they did give it all back. They have a big partnership, them and Anduril, for the for the Golden Dome around the US. So they're going to be getting a lot of money. Obviously, you also know that they're the exclusive AI provider for the Pentagon right now. Their Maven system being used, well, it was used in Venezuela, but also being used for the Iran situation on an ongoing basis right now. But so not only is Palantir good for government purposes, military purposes, but also their commercial segment is growing very, very, very rapidly too. Line in the sand levels for this stock right now is about 148. You wouldn't want to see them give that back because they've done a good job of holding this daily uptrend for a bit of a round and breakout pattern here. They're also holding the EMAs. You lose these lows and the EMAs, it's not going to look so good. That'll be a weekly lower high. You might just be heading a little bit lower here for further consolidation. So Palantir is one that I do enjoy. It has some good IV. So if we get a breakdown into here, I'm not going to avoid it. I'm just going to be playing some short puts well under the market as I don't mind it so much down in the 130 to about 120 range. And as of right now, guys, for any swing trade longs, if you're in any swing trade longs, you got a very clear stop loss area, right? Below these lows, You don't really want to stay in. You'd rather let them reset the price action if they have to dip a little bit lower and restart the trade all over again. But Palantir not looking too bad in the grand scheme of things. It could look a whole lot worse. There's a whole lot of companies that look a lot worse than Palantir at the current time. Moving on to SOFI, which is one company that looks a whole lot worse than Palantir. SOFI, guys, daily 12 EMA, right? Look at these shorts. This is just short sellers, right? So private credit situation, yes. And then the short sellers have kind of piled on juice ever since then. No daily uptrend, no captures of the EMA. So no need to even think about any swing trade longs at the current time. Coming into a very big area of support right now, which is basically 17 down to about 14. I'm selling some short puts at the bottom end of the range right here. It's big prior resistance. It was big previous support as well. And this could be a logical area where SOFI bulls attempt to form some sort of a, well, they try to mount some form of a defense, right? As of right now, it's just kind of falling through weekly oversold conditions. The valuation for longer term share accumulation, arguably now, would be the period of time where you would be interested. Below 17, you're trading at a 0.86 peg and about a 5.27 price to sales. So they're growing revenue and EPS at very fast clips, but it's not going to move, guys. If SoFi is not going to, if Robinhood doesn't move, if Visa, MasterCard, and dare I say even XLF as a whole, right? If all the financials don't move, SoFi is not going anywhere, right? So just got to keep that in mind. It's been very weak, been very soft. And when that's the case, the best thing we can possibly do, rather than saying, this is the bottom, I'm going long, this is the bottom, this is the bottom, I'm just selling some put options and collecting some decent premium in the process, right? So keep that in mind. We do have some bullish divergence here forming, right? It's a little bit choppy, but still, right? So there's some building of pressure. It will only take one good piece of news for financials, right? And you'll probably see SoFi with a big break. Just watch if they can capture these EMAs, because they haven't been able to do it, guys, since the month of January, right? Moving on to Uber right now. Uber, unfortunately, still at the lows, although being up 1%, a very weak 1% on the chart. So daily has been unwound right now. The weekly bears still in full control of this time frame as well. Weekly downtrend, lower highs being set. If they go for the lows, you guys know exactly what I'm doing. Selling put options down here or just accumulating long-term shares. Low 70s through 60s is my desired location for DCA. That's just because the company's at a very fair valuation. It's kind of stuck in all of large cap growth right now. I mean, it's not just Uber, it's all of large cap growth. This is SCHG. Large cap growth, right? It's been nothing but down since October. So don't feel too bad if, let's say, you have a long-term portfolio or you've been trading large caps and your portfolio is possibly down, 10% year to date or somewhere around there. I mean, this ETF is down like 10, 12%, depending on last week or this week, right? From the highs. And Uber is, at the end of the day, large cap growth. So until there's a big pivot back into risk, a little bit of risk on for large cap growth, and we start getting more market breadth for a lot of large cap technology here, even Uber is going to be weak, but that doesn't mean we can't play it. It just means we have to accumulate for the long term and not be too impatient, or sell some put options on some red days under 65 down here, which would be a phenomenal opportunity, guys. Just looking for the bottom end of that support zone down there. And last but not least, good old TSM, which had their own little news headline today. TSM price action looking pretty good. Looking pretty good, right? So clearly defined stop loss area right now. If you back test this, you're looking for the daily uptrend conversion. If you lose this area, well, that's why you don't want to be in anymore, right? It's going to be lower high into lower low, weekly downtrend, but if a head and shoulders at that point as well would be had, and you'd just be going for a bit of monthly consolidation to where? Possibly to the 300 range, to the 12 EMA. This would be a nice area that I could be able to layer on a bit more size with some short put entries, or maybe a bit more shares for the long term. As of right now, there's only one little thing that you can do, a bit of a swing trade with a very tight stop loss, right? Going for the trend continuation trade, stop loss below there, take profits around the highs, obviously not financial advice. It's the only form of swing trade that I see. Just looking for continuation, right? And continuation of the higher time frames as well. So doesn't look too bad. It's not something that I'm in personally, just something that I figured I should throw out there, because we are seeing some instances here that the price action is looking to kind of take over, and your daily MACD also crossing over after being down for a better part of the last month, right? It's been a decent consolidation period on TSM. That being said, that is everything for your overall market rundown and your big tech and large cap list right there. Now, let's move into our biggest gainers and losers of the day. Okay, so biggest losers of the day right now, On Running. Now, I like this company. I really do. I like this brand, and their shoes are very comfortable. I actually own a pair. That being said, consumer discretionary, guys, is just not the place to be. I mean, you see On Running down here, Kava also with a big red day. We can talk about the other ones that have come down a lot recently, CLH or Elf Beauty or Estee Lauder that was down recently, or Nike stock as well, right? And my question to most people that are actually buying these is, you know, when you have such good opportunities in the Mag 7 names and such good opportunities in legacy, there's other things that are exposed to consumer discretionary spending as well. Visa and MasterCard, right? With much more resilient business models, much better margins, and much wider moats than so many of these smaller consumer discretionary stocks. The question that I ask myself, and then I ask you guys as well, is that really the best use of your money? There will be a time where you will see me play a lot more consumer discretionary stocks. I haven't played the consumer discretionary in a very long time at this point because the inflation narrative, the inflation meta right now, and the interest rate meta, and the fact that the consumer is still fairly weak in most people's eyes is just not conducive to money flows into that sector right now. I think it's very clear the direction of all of these trends, right? So if you're trying to play there's just not a case for me to buy these stocks for any instance. If I'm looking for long-term portfolio buys, there are many higher quality companies that would be exposed indirectly to consumer discretionary, or that are just some of the best technology companies in the world. I would much rather build out those positions instead, right? That's for the long term. And in contrast, if we're looking for swing trades, right? Well, I'm not going to take swing trades on companies that just have perpetual downtrends, am I? No, I'm going to be targeting some of the sectors that we regularly talk about on a daily basis, right? Themes with much better price action and with much better money flows. So in my opinion, there's just no narrative for me to play consumer discretionary right now. And you guys know I don't really play consumer staples, but anything tied into the consumer right now, a little bit rough, right? So those are my thoughts on that one. And that includes even SaaS, right? SaaS companies like Figma or Adobe, CRM. I've been very clear on these software names. I'm not interested in any of them, to be quite frank with you, at all. The only ones I would be interested in are names like Microsoft and Palantir, which are the two biggest weights in the IGV index, which is software. The only other niche that I'd be interested in software would be cybersecurity, because I think that it has the clearest turnaround thesis of anything in the SaaS landscape right now. So that's just my opinion. Take from that what you will. Now, talk about the memory names, SanDisk and Micron, which were down today. Some people might be scratching their heads as to why. Well, this one came out. This is Google's TurboQuant. It came out last night. Our new compression algorithm that reduces LLM key value cache memory by at least 6 times and delivers up to 8 times speedup, all with 0 accuracy loss and redefining AI efficiency. So essentially, reducing value cache memory by at least 6 times is the headline that people ran with today. And you can see here, right? It's a pretty big deal for Google in terms of their advancements in the technology. However, if you're not an engineer and you have no idea what this means, well, there's fun little tools that can help you derive this, right? So just out of grok, just being very simple with it, right? In simple terms, is this piece of news from Google alone enough to warrant a sell-off on Micron or SanDisk, or should you be buying these dips? Well, you can ask AI itself, right? So is the news enough to negate the entire memory stock expansion thesis for the next few years, or is there just too much compute demand even with this advancement in Google memory technology? A very fair question that I asked Grok AI, and it just runs through. You can put it through Gemini, put it through ChatGPT, and the simple answer was no. TurboQuant is not enough to negate the memory stock expansion thesis for the next few years. Compute demand, training and inference is growing far faster than any single KV cache optimization can offset. As a matter of fact, it also says that this news was already priced in previously to the stock. This news about TurboQuant is about 1 year old at this point. They're now implementing it, but all the benchmarks and whatnot are essentially baked into the thesis already. That being said as well, it goes through many different things and concludes that the thesis stays intact and arguably gets stronger in the medium term. TurboQuant and similar will make AI cheaper to serve, accelerating deployment and total compute spend. Short-term HBM and DRAM tightness and price volatility are already locked in through 2026, 2027, and long-term, more efficient inference just shifts the curve upwards, not downwards. This is a reference to Javon's paradox, right? When some instances get cheaper, you actually want to deploy more and more compute power. So not my opinion. This is just AI, a very neutral opinion. It gives more information as to why it doesn't kill the thesis. Inference being only for KV cache only. Those are Google's upgrades right now. So that being said, HBM demand largely saying to be referencing being untouched. However, that news headline will hit the stocks temporarily. That's why you kind of have to do your research and see whether or not it actually holds true. That being said, Micron is currently teetering on the edge right now. We have not closed below this 50-day EMA, arguably, guys, since last August. So you got a bit of a regime change. The bulls literally have 1 or 2 more days to capture this back in a very quick fashion. if we are swing trading, stop loss needs to be clearly below the 360 lows right here. Why? Because you don't want to get caught in this monthly downswing. This monthly downswing would be a phenomenal opportunity to pick up some of these memory names, especially Micron, right? That being said, SanDisk coming down as well, but SanDisk's price action is a little bit better, right? So they're holding up the highs right now, trying to establish some daily higher lows and maybe go for the expansion. But SanDisk, same thing. If they just erode all the gains and trail Micron, I mean, it's pretty clear, right? Your invalidation thesis would be down below here about 530, because the last thing you want is to stay in SanDisk if it does choose to go for a monthly consolidation phase, which would be very normal. I mean, these charts have been vertical, right? So the bulls are hanging on by a thread on Micron right now. Curious to see if they can reverse that. If not, you may be heading into a heavier consolidation. I still like the memory names. I also like the Korean memory names in EWI. Same concept though. EWI is giving you a very clear area to trade off of. Has not really closed below this 50 daily EMA in a very long time, guys. Talking about since last April. It's been a very long time. So if it does close down below there and you get the daily downtrend, you know you might just be heading for a bit more monthly consolidation, which will give us some better areas to get in a little bit heavier for some longer duration swing trades after big consolidation. Now that we know the thesis for the memory expansion remains largely untouched by this Google News headline overall. So keep that in mind. Those are kind of the only ones that I wanted to talk about to the downside today. We covered most of the main themes that came down today: consumer discretionary, software again, some of the cybersecurity plays, which I still think are attractive, playing as a group under the broad banner of an ETF, something like a CIBR or BUG. There's a number of them. It's up to you guys to do a bit of research. I have WCBR, right? So I have just an ETF. It's not a very large position, but at least I don't have any individual companies, such as Palo Alto Networks or CrowdStrike. Not that there's anything wrong with them. They're probably the best two of the entire batch right there, but I digress. That's pretty much all the themes that I want to cover to the downside right now. Moving on, maybe we can cover a little bit of, even Path, names like Path, right? Robotics process automation. This doesn't, well, it has Claude integration, but the market deems it to compete directly with Claude, right? And unfortunately for them, they've just been coming down as part of the SaaS narrative. So I do still own Path. I do still want to hold it for the longer term thesis. It's not a very big position for me. It's not as if I went all in, right? It's just one of many plays that I have in the entire AI world. But Path, until this software narrative turns around, it's not going to get any love. And additionally, Zeta as well, right? Zeta, you might remember we were talking a lot about it down here in the 16 range. Zeta as well has been struggling, not because the company is doing anything wrong. They had phenomenal earnings last time they reported. However, all of ad tech, this is advertising, marketing, right? All of ad tech's been down. Meta's down, Trade Desk is down, Reddit's down, even Google, right? They make a lot of their revenue, like 80% of the revenue from advertising, right? They've been down. So if all those companies are down, I mean, you can't realistically expect Zeta to blast off here and clip back into the 25 range, right? So I still do own some longer term Zeta shares, but you kind of got to temper your expectations in terms of the speed of the recovery on a lot of these things. If all of ad tech is down, Zeta is just not going to go up. That being said, I still do own the company, but similar to Path, right? It's not a very large position for me. It's just part of an overall batch of companies that I hold for some asymmetric bets, meaning we're buying companies at the cheaper end of their valuations with possible multiples expansion, right? Talking about like a 2, 3, 4x over time, not over the next week, not over the next month, but possibly over the next few quarters and next few years as their thesis and fundamentals kind of continue to tick up. So still a decent time to be accumulating, but it's like I said, right? It's not one of my biggest positions at all, just something additionally that I hold in the portfolio. And the same thing for TMDX. I haven't talked about TMDX in a while. This one too is a new company that I've acquired over the course of the past few months. My first buys were in the 130s here. And I'll be adding a little bit more. There's nothing wrong with this thesis. It's daily oversold. It's come down with the broader healthcare sector. The thesis is unchanged, right? It's a $3 billion company, and what I'm looking for here is the expansion into more end markets for this business. Analyst price targets are all above. It's just been out of favor with all of healthcare. EPS, steady up and to the right, and revenue. Look at this revenue ramp. Nothing wrong with this business at all. Now it's just at a more fair valuation. They're expanding into different end markets, the kidney market, and also expanding internationally. There's not really any other company that does this. I mean, some companies have certain things like this, but no company specifically devoted to the organ transportation business, right? It's a very big business, and it will be a very big business in the future. I like this company a lot, but suffice to say, the price action just has not been very conducive to any expansion, but I do like these prices. It's just a longer term hold for me. Moving on to now some of the names that printed the highs today. So talking about company number one, we're going to move into good old ARM. So ARM coming out with their new chip design yesterday. Well, not new chip design, their new suite of chips, which is going to add a decent chunk of revenue to their already pretty good revenue mix right now. So if you take a look here, the projections for ARM says that they might be able to expect 15 billion of revenue from the chip business in fiscal 2031. As of right now, they're only making revenue from their chip designs and royalty functions. It's a very profitable business, but has always traded relatively rich, right? So it's a $143 billion company. And as you can see from their most recent sales projections, right, in 2026, they'll only be making about $6 billion. So they trade excessively rich, but at least this gives the company an extra revenue growth driver. So that being said, that's why the company was up so much after that news event today. Still, the company trades a little bit rich. Is it my favorite company? No, but are the forward prospects for the business looking a lot brighter in terms of the growth prospects of it? Yes. Is it undervalued? Probably not. Could it be interesting if we get a bit of a retracement down here? If we want to take the, if you like the appeal of what ARM is doing, possibly, right? Still not one of my favorite bets in the market, but one that I will be paying a bit more close attention to as we get more clarity in terms of the forward revenue streams, right? Moving into other companies, perhaps, let's talk about the space trade a little bit. ASTS looking really solid right here. As we've been saying over the past few weeks, right? The space trade was providing very nice entry opportunities, right? As we're curling down right there, very clear support area, and we could have easily taken on some trades with some higher low prospects as the companies are just looking to re-expand, continue this weekly uptrend, and just continue this monthly push right here. ASTS doesn't look too bad. I know a lot of you guys like this one as well. Rocket Lab also doesn't look too bad. I'm in this one personally. They've held up support really well down here around the low 60 range, so keep that in mind. And many other smaller companies such as Planet Labs, which had their earnings just the other day, up huge. Every single time they report earnings, they have a big 30% gap up higher. The valuation right now, I'm not going to lie, at about 12 billion is a touch stretched, but still very solid company, suffice to say. And other companies, right, that I don't often talk about, but that I do own. Redwire is one that I do own for the space innovation trade. Fly had a really good day today, up 16%. So definitely, guys, pay attention to the space trade. It's not just, you know, the flavor of the moment. There is very real money being spent, big money being spent here over the next 5 to 10 years. And especially, we will see what happens with that SpaceX IPO later this week. If we can find some discounts on these names, still a big fan of adding to some of my existing positions. Moving on now to which ones have we not covered? So I guess we can cover maybe some of the Neo clouds, right? So CIFR price action looking not too bad at all. They had some news today. Overall too. So price action is looking pretty good with these lows right there around $14. So whether you're in CIFR or NBIS or maybe even CoreWeave, which had a pretty good day today as well, about 5.5%. The Neo clouds is very simple, right? They're currently in the execution layer. They had the funding layer last year, even into this year with big deals with Meta and NBIS. Now they're in the execution layer. They're building the data centers right now, which is why it's been so slow. And then you get to collect all the revenues on the data centers, right? So still a lot of these are in phases of consolidation. My favorite one specifically is NBIS. It's my biggest one of the bunch. Full disclaimer, I own a decent chunk of NBIS. I own a little bit of IRN, and I own a little bit of CoreWeave. So depending on which one you want to play, I mean, several of them have been looking nice recently, like Wolf has been really nice in terms of appreciation. APLD has been lagging a bit behind, but similar to the other ones, right? We're just trying to establish some structure lows, but you can see a lot of the price action, whether on APLD, CIFR, right? It's starting to kind of round the bend. NBIS broke out first with their big news from Meta and holding up quite nicely. NBIS, if you do move a little bit lower, maybe looking to add a couple shares down here, but also playing short puts under the market. You guys know, whenever we were down here, right, I was kind of pounding the table on saying I'm buying NBIS under 90 down through 70 is my area to kind of build into this position after some extended consolidation into the good old 12 monthly EMAs, right? So that's really where I would like to accumulate some positions on many of the companies that are that have very favorable price action, right? Can we do anything else right now? Let's take a look. Maybe some of you guys want me to cover Robinhood. Yesterday we did cover Robinhood. It's just too tight into crypto, right? I mean, like look at the correlation, right? Look at the correlation between look at the correlation between Bitcoin and Robinhood. That is like identical. It's identical right now. Okay. Arguably Bitcoin's been holding up better, which is the blue line right here, than Robinhood recently. Fintech, by large and by far, because of how financials have been pouring, have been out of favor, but it's specifically Robinhood as well has been largely out of favor. Now we are trying to find a base of support down here in the middle of nowhere. There's literally nothing here, right? If you break down one level further into the 60 or even 50 handles, I may actually be finally interested in buying some Robinhood, as the valuation has compressed meaningfully at 80 bucks when we did it last after their earnings at a 1.41 peg. Not terrible. Give me like a 60 handle and it gets substantially better. You could arguably argue down here that it's finally fair or undervalued, so I may be looking into it, but as of right now, the price action is just not fair. Maybe the easiest way to play this one is just selling put options down here to maybe acquire a position if you're interested, but the price action is just, it's just not conducive to any upswings whatsoever, right? You need to see a clear trend change right here to be able to say, okay, these are your lows, and we'll play off those lows with a clearly defined stop loss, and maybe go for some expansion right here into the 90 range. I think that is probably everything for today, guys. I mean, there's many more ideas out there, but I just focus on some of the key themes, some of the drone companies, right? Whether it's KTOS or AVAV, also some of my favorite companies to kind of lean into for the military trades over the next few, let's call it 3 to 5 years type of thing, right? They're giving you some really good entries right now. Overall, AVAV and KTOS, right? Some of the more pure play drone companies in the military complex. So those, Ondas as well. Any further weakness, I'll be building my position in Ondas as well. Just a few key themes to look out for. We'll talk about more themes as we move on throughout these videos through the weeks, and even AMPX. AMPX actually does the batteries for a lot of these drones. We were in from the $10 range. I sold half the position at around $19, which is a very nice sell. And so now most of my position is free. That's in the trading account. In my big account, I'm still holding all the shares that I acquired down there, which is a pretty sizable position. If we get any downswings, I'll be very interested in playing AMPX again, maybe around this $14 to $12 range in the event that this one breaks down too. So just some things to pay attention to, right? Now, we'll cover more of these key themes and narratives, but you guys know, right? Energy, drones and defense. Then you have semiconductor connectivity, which we talk about oftentimes, right? Whether it's either Celestica or Vertiv or some of the photonics names, AOI or Coherent or Fabrinet or CN, et cetera, et cetera, et cetera. We talk about these fairly regularly, not every single day, but those are the themes, right? Or whether it's even some of the data center builders like Fixed Comfort Systems for HVAC systems and other construction purposes. A smaller name that, this one is very solid. I don't think I've ever talked about it on the channel, but I'll give you guys another freebie right now, right? Very solid breakout right now, looking pretty good. But that being said, there is always a bull market somewhere, okay? There's always some very key themes and narratives that you can be playing for some very nice momentum. And I'll try my best to show them all to you guys on the channel on a regular basis. That being said, if you enjoyed today's video, guys, consider dropping a like. Would really appreciate it. Consider subscribing to the channel if you're new as well. We do these videos every single Monday to Thursday now, and then maybe one on Saturday after the close, just to recap the day's events and all the juicy trades or longer term positions that we can find in any given market. And last but not least, if you have any questions or feedback, or if you guys are looking into certain specific plays, definitely let us know down below in the comments section. I always love reading your guys' comments, and I will respond to you as soon as possible. And last but not least, if you're tired of trading and investing in these markets all by yourself, if it's just information overload, or you're unsure what's going on in the index level or under the hood in terms of key themes or key trades that you should be looking into, you may consider joining our trading and investing group. Every single day in that group, guys, I share all of my trades in real time. There's a lot of small cap thematic trades in there, and I also take a lot of trades with the wheel strategy, so selling puts under the market, and also long-term portfolio positions as well. So if you're curious what I'm doing in my portfolios, whether long duration or the trading portfolios, whether those are selling options in the market, buying small caps for thematic swing trades, call debit spreads, leap call options on things that I'm looking into as well, you guys get access to everything that I'm doing on a daily basis. You also get access to our private morning live streams. Monday to Friday, I stream live for 2 to 3 hours in the morning, and we talk about all the key trades of the day. We trade the markets live, long-term positions as well. And I also take all your questions on your stocks, your options, your long-term portfolios. It's the best place to ask me questions because I can answer you with the charts, with the fundamentals, and help just kind of structure a thesis, right, around something that you may be interested in. And you also get access to 15 hours of private content, stuff that I'll never put on YouTube, of my various trading strategies, how I do technical analysis, fundamental analysis, et cetera, et cetera, et cetera. And last but not least, you also get access to all of my charts and all of my watch lists, all of them, and everything that you would see on a chart, such as support resistance and all the valuations. If you guys just didn't want to do them on your own, You can copy paste all of them. I literally have this stuff on like hundreds of companies. It's super easy. You literally spend like 15, 20 seconds, click a few buttons. You get to copy all my watch lists and all my chart layouts. They become yours. If any of that interests you, we'd be glad to have you in the community, and you will have a lot of fun with us in the process. So the link to join us is down below in the video description. Hopefully I get to see some of you in there soon with us. And if not, I'll see you right back here on the channel. That's it for me today, guys. Have a good day in the markets tomorrow. I will see you tomorrow after the close. Have a good one. Peace.